The outlook going forward continues to be very robust, Agam. If you look at this particular quarter, the revenue number has gone up 28.5% year on year, and it's gone up 7.1% quarter on quarter, as you talked about. Equally importantly, operating profits have gone up 39.4% year on year, and our operating margin at 18.6% for the mid-tier is possibly best in class now. So we see the recent quarters, the last 5 or 6 quarters, as a very strong validation of the strategy that we've put in, the structure that we've put in, very importantly, the new leaders that we've hired. And we believe in some ways we are just starting. So we don't see the momentum tapering off. We expect to see the momentum continuing going forward.
Right, so the investors will certainly be heartened to hear that out. But I also want to know about and perhaps understand a little more. What we've seen in the industry at this point in time is a little bit of a talent crunch, because of which we are seeing a rise in people's costs. At least that is the case for some of your peers in the industry. Now, I do understand that you guys have built a good team out there, at least as far as your top hierarchy is concerned. How are you witnessing these trends right now with respect to hiring costs and perhaps the impact on margins, if you can give us any outlook here?
So Agam, I think the proof in our case lies in the results that we've shown. Our margins at a point in time, when you're right, costs have been under pressure, have continued to rise. And as we've said in the past as well, we think that the 18% margin on a yearly level moving forward in the years to come is a sustainable number for us. So we understand costs are rising, we see that, but the productivity measures that we put in place, the cost outs that we have done from areas that were not absolutely critical to the organization, have allowed us to offset the issues that we've seen around price cost. We expect the margins now, where they are, to be at a level where 18% or plus, as we've said earlier also, is a number that we think we can continue to deliver on.
Right, Sudhir, if you could also tell us a little more about the deal wins this particular quarter and the nature of these deals and how they are expected to pan out over, say, the next few quarters.
Absolutely. We were very happy with the 2 large deals that we signed, because both these large deals represent incremental revenues for us in the quarters and the years to come. The first one was a very interesting large deal. That was a large deal that we've signed with an insurance client. And this is a very new client, opened just about a quarter or 2 quarters back. For this client, we've secured a complete order to help them do a complete cloud-based insurance platform rollout. So that's a new client, almost new client, large order that's been booked from them. The second large deal that we've secured again represents incremental revenue from our point of view. And out there, what we are doing is we're going to set up a very large offshore center or a pool of resources within an offshore center, which will help one of our large BFS clients roll out all enhancements globally and changes to their largest financial platform.
Okay, and perhaps a final question then, Sudhir. I just want to better understand about your key verticals. I suspect you are seeing increased traction with respect to transportation, and of course, you've already spoken to a certain extent about insurance, but if you could also give us an idea about how financial services is panning out for you.
Financial services is working out well for us, Agam. If you were to look at the last 2 or 3 quarters, the compounded quarterly rate would be more than 5% for financial services. In financial services, our focus continues to be on asset and on wealth management, and we continue to focus on the securities operations transaction processing space. In those areas, we continue to see demand, and we expect that financial services like travel and like insurance, which are the other 2 verticals for us, will continue to move forward as planned.